African Bank, the curator does give a regular update on where things stand, so perhaps I could just reiterate a few things. First of all, it is much more stable now, and the question has been, a new credit regime has been introduced. Loans continue to be granted at quite a significant level. The deposits have stabilized, and it really is functioning as open for business, and I think that's a very important factor in African Bank. Obviously, it's looking at a different business model and much more restricted criteria around lending, and therefore your loan book should be improving as we go forward in that regard. The question then has, again, a big focus on the question of collections and ensuring that collections are really being maintained and enhanced so that there can be no drop-off in repayments. So that's a very critical part to bringing about both a good bank as well as improving collection on bad book. The question of the liquidity continues to recover in terms of the bank, and the staff have really been reasonably stable, and executive management brought in as well. So I think at that level it's functioning as we had expected. The other question that would be is that the approach that we would be looking at in terms of the time is how do we now bed down the concept of good bank and how that works. It will take a little bit more time, and I think there have been indications that this is sometime next year, early next year, that there will be the question of finalizing that and listing the new good bank. And then what would be happening, obviously it's a very integrated bank, and then how we deal with the bad loans and the bad book and ensure that that is continued to be collected. At this point in time, the bank has not had to put any resources in due course. That will take place as we are buying that bad book, and that will then be worked out in terms of how that takes place. That's really where we stand. It's a lot of very complex work that needs to be done to get this resolved, and I'm sure that you will appreciate that that takes some time. It's not just a simple division, and because again we're dealing with a going concern that is functional. In relation to the second part of, or second question, is how do you prevent these things in the future? Well, you know, I think that, again, in terms of the specifics of African Bank, it had a particular business model and had particular problems. And we've seen the rest of the system is not affected by what occurred at African Bank. A critical question around the approach is to ensure that you have very good and sound and robust credit criteria. And again, if we looked at the focus of unsecured lending, I think this is a much bigger question for the country as a whole in terms of how do you ensure inclusion and access to finance, because that is very much part of government policy. At the same time, you don't want reckless lending or bad lending. You also want to ensure that it is affordable. Part of the challenge that I think there is going forward, if you looked at unsecured lending per se, depends obviously when you start. If you remember a couple of years ago, unsecured lending was growing at around 30% per annum, which our view was unsustainable. We had discussions as part of bank supervision's engagement with the banks, all the banks that are regulated by the SABC, about this question. And I think it was recognized that this was not sustainable, but if you look at it now, unsecured lending is actually negative territory. And I think that also has problems. So I do think that this is something that government and the banking sector as a whole need to look at, is what is the sustainable access and affordable access to finance that creates the ability for inclusion. And don't forget, this occurs in your banking sector. There's the banking sector, there's the regulated sector, which is regulated by the NCR and not by the bank, because those are not necessarily banks, and then there's the totally unregulated sector. And each area has a different rate of return, if you like, and cost. And I do think that this is an area that I would hope together the country as a whole works on. I would strongly recommend that there is a national focus on how money works and cost of debt, so that everybody in society, whether you are employed or unemployed or a high earner or a low earner, don't assume that this is simply a problem for lower earners. It's not. These are high earning people who also get into debt and find themselves who are unable to get out of that debt, partly because of the cost. And I think that this is a focus more broadly than simply a question of whether this is unsecured lending. I think there's a much greater need in society as a whole to understand debt and its implications and how difficult it is to get out of it once you're in. But generally speaking, in terms of the banks, even when Moody's took its decisions about the banking sector, it said, notwithstanding this, the banking sector is sound, it is very functional, it is very well capitalized, it has very good liquidity coverage ratios, and we have every confidence that the banking sector is sound and that this was a particular incident around African Bank. That doesn't mean to say there are not lessons to be learned from it, and that's what we will be examining through the MIGO to see are there areas that we can certainly improve on, both in terms of regulation, supervision, and frameworks.
Two different 7 billions, so that there isn't confusion about that. The first 7 billion that you are all familiar with is the question of the bank buying the bad book. The bad book is worth about 31, 32 billion, which has been written down to 17 billion, of which the bank is paying 7 billion for. That 7 billion for the bad book, which would then be collected and offset against that. So 31 billion collection to meet your 7 billion, obviously at various levels, because some of that has been written off. And we do expect that over time that would be fully recovered. Therefore, we don't expect taxpayers to end up paying anything in that regard. At this point in time, there has been no payment made so far for that, and that payment would go into Good Bank in order to be part of the capitalization of Good Bank. The second 7 billion, as is described on page 18 of the statement here, is simply a backstop. It's a legal guarantee for us because the bank cannot lend in any form or provide any resource without collateral. And the government guarantee provides, or the government backstop provides that should that be required. At this point in time, it is not required. We don't expect it to be required, but it just covers us in case it should be required. So therefore, there is no expectation that we would be using it at all, and if it is required, it would not necessarily take the form of a lending, it would then take perhaps a different form. So from our expectations, in the way it is envisaged that this unravels, this is simply a question of ensuring that should there be any requirement, you do have the ability to do that, but we don't envisage doing that in any way. It is simply a backstop should it be required for legal purposes.